The two biggest banks in the UAE reported a jump in annual profit. This was as the country's strong economic growth helped to drive an increase in margins and net interest income. Let's bring in Ryan Lamond. He's the CEO of Neovision Wealth Management. Two huge banks, FAB and Emirates NBD. I look at our FAB, profit rises 7% to $13 billion. 13 billion dirhams, I should say. And Emirates NBD up 40%, but impairments falling at Emirates NBD. What are you more shocked about? I'm quite drawn to the impairments at Emirates NBD falling by 12%.
Good morning, Manus. Well, these results were quite surprising, and we call it an inflection point between the two biggest banks of the UAE. We think Emirates NBD has performed much better. If you look at the operating profit, and this is what we need to look at, rather than the one-offs, Emirates NBD has performed much, much better than FAB, despite FAB having much more firepower and double the capital.
That performance by FAB, I think they prefer to be called FAB, I was told. I was to stop calling them FAB. I was a bad boy. So we got to correct ourselves. Can those impairments, can that level of impairment drop at Emirates NBD persist?
It can. Their assets are going up. Their loans are flat. At FAB, loans are dropping. Total loans are dropping. Assets are dropping. Their net revenue is the same what it was in Q4 last year. So it's not really growing. You have one-offs, great. This is contributing to net revenue, but this is not what we look at. This is not what investors should look at. It's operating profit that they should look at.
Okay, I'm just going to play for our viewers a little bit of sound from Minister Zayoudi when I was in Davos last week. He talked about the immunity of the UAE. Let's take a listen.
Very optimistic. Looking at the numbers in the last quarter of 2022, the prediction was much worse than what we achieved globally. And the expectation for this year is very pessimistic. But from the discussion, I'm very optimistic that we'll exceed all the numbers which has been predicted. And even when it comes to the recessions, I don't think there will be a major recessions globally. It's going to be very mild or even much.
Do we escape in the Emirates? Do we escape any downdraft? Are we immune?
We're very immune. We did very excellent last year, and we're going to do an excellent performance this year as well.
His defining line in that conversation was, we are very immune, the UAE. With that in mind, does that compound the flow of money into these banking names in the UAE for you? Does that compound? Does that add? Will we see more momentum into these banking stocks?
100%. I've been here since 2008. I've never seen so much activity as today. I'm literally saying no to mandates, Manus. It's incredible.
The other major... Sorry, go ahead.
What he calls immunity, I call it resilience. The UAE is really resilient.
Even at 5-6% in rates because we're dollar-based?
100%. And this is good because now investors will start being demanding, okay? When we have an IPO, no more at the high range of the IPO. Now we need to be at the mid-range and low range when there's an IPO.
So you think that the trajectory of rates will push better pricing in the IPO market?
Absolutely, and it should, and investors should be demanding in that perspective. We've seen several IPOs happen at the high range of the valuation, and there was a flop afterwards, right? We've had several. So now the new IPOs that are upcoming, investors should be demanding better pricing.
That comes down to the banks. That comes down to political will in the banks. You know that.
No, absolutely. But I don't think any bank would like to see an IPO just dip a few days after the IPO, right?
It's certainly not good for the regional investor. Look, part of the strength, as you say, not immunity is not the word that you would use. Part of the strength is the musculature of oil. From war and crises to where we are now with OPEC cuts, which I think have put a floor under the price of oil. Do you test $100 on the demand reopening narrative from China? What have you penciled in for that reopening? Because I've seen everything from 1.8 million barrels a day from various houses in the US through to Pierre Andurand. I was told I wasn't allowed to quote him because he was such a mega bull at 4 million barrels a day, but I'll quote him anyway. Go on.
Two numbers. China is still roughly 1.7 million barrels a day below pre-pandemic. Second number, The airline industry is 2.1 million barrels a day lower than pre-pandemic. China opens up, the Chinese start traveling, airline recover, there will be pressure on pricing. We are long oil with a target price of $100.
Okay, when can we make that $100?
Anytime in the first half of 2023.
So you're in the inflation rollover camp then. So you see rates at 5%, but inflation rolling over. But we never really had a spiral out of control inflation problem. We have a cost of living crisis. You can look at my LinkedIn and see the rent rise that I've been offered. I mean, it's lunacy.
Inflation, we see a second jump later on. We've rarely seen inflation go to the high single digit, not have a second cycle of inflation. Oil at $85 and above is inflationary. China opening up is inflationary. China closing also is inflationary due to supply chains, but we see a second jump in inflation.
So you're contrarian then in your inflation view, because there's this drumbeat of a rolling down on inflation expectations, on the Atlanta Fed expectations, etc. Everybody believes that inflation will roll down. You believe it will spike again.
We see a second spike between employees asking for a wage increase to these wages being spent in the economy. There's a 12-month cycle, typically. This is textbook economics. And this is where we see the second jump in inflation, and that's why we're away from the US for the moment.
Okay, out of US and into Ryan, thank you so much. Ryan Lamont, CEO of Neovision Wealth Management, my guest this morning on The Markets.